So, good morning. Welcome to Forex.Today. Hope you're doing well. Oh, Cat's been putting the whole day and have not hit the cup. Okay. Interesting. Let's talk about that, all right? Hang on. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com and Forex Speaker of the Year. Woohoo! That's true. I don't know. It's just facts, man. Hey, we do these sessions every day here at Forex.Today, Monday through Thursday, and then every Friday at FXStreet.com, 7:30 in the morning. Technical and fundamental analysis is discussed. Your questions are answered. You're the boss. I am the humble currency trader. Thank you. Thank you. Ryan's also got some questions about the putt. Sure. Okay. All right. We'll get there. We'll get there. Hang on. Hang on, Bubba. Alrighty then. Putt. What is a putt? Going back to yesterday's conversation, very often I use a putt when the overall market is not going in the direction of my prevailing trend. Just wait, hang on. Did I get knocked out of my CAD yen trade? Son of a what? I did, didn't I? I'm sorry. No, I'm just looking. I'm looking. I'm like, what? I was in. Anyways, prevailing trend, right? Sorry. Pull it together, son. All right. So, yeah. All right. So you have a general long-term trading strategy, right? Fundamental bias, if you will. And let's just say, I'll make something up. Let's say you want all Japanese yen pairs to go up because you believe the Japanese yen has reasons to weaken. So your long-term trend, your long-term position or direction would be up on those pairs. So like, let's go to this Aussie yen. Okay. So if you're building a portfolio, you're going to want to be long a lot of Japanese yen pairs, right? I mean, that's your strategy. That's what you're telling your investors. Did I click CAD? Oh, weird. I was in that. Son of a, I don't know what the, but anyways, so you want to build a portfolio where all the yen pairs are going up and you're in near the bottom, stops or break, okay? But what do you do when it's pretty obvious the Japanese yen's going to be strong today, counter to your position? Do you ignore it? That is one way, actually, to do nothing. Why do you need to do anything? Right? Your stop's at break even. You've already made the decision. You're in at support. Why ever get out? And sometimes you'll get knocked out. Oh, boo-hoo. But you didn't lose any money and you had the opportunity, right? But what if you want to be more of an active manager? This is the idea of active versus passive. Passive would just do nothing and charge you 1% of your entire net worth for doing nothing. That's how the market works, right? But if you're an active manager, you're going to want to hedge that. Now, old school would be to just simply short, and that would offset the long, which I'm here. But I don't like that either because you're not actually winning, and you're actually putting additional funds at risk or removing it from your available margin and all that kind of stuff. And I think the best hedge in the world is making more money and not just locking in yesterday's good trade. I'd rather you make money today, right? So how do you do that? Well, that's where I got this idea of a put, where I want to make a series of short-term trades and take profit. I don't actually want to be in the trade. It's not the direction of my long-term bias. My analysis says on the long term it won't go in this direction, which would in this case be down. But basic technical analysis will tell you that there's a high probability of it coming down, and I want to just make some money on the way down. I want to be short-term short. So for example, this is an hourly chart. What we discussed yesterday was this was the daily 21 EMA. And therefore, it's supposed to fall. It's supposed to. That's why we use the 21 EMA, right? So that's where you say, okay, change in tactics. Strategy hasn't changed. Strategy is you want to be long this sucker. Okay? But the tactics now is to, trade, recognize the breakout here, sell the pullback. Are you in it for a week? No. Are you in it for a day? No. Can you pick up 25 or 30 pips? Yes. Right? Sell the pullback. Are you in it for a day? No. Can you pick up 25, 30, 40, 50 pips? Yes. And then at some point, the market's going to reverse, make a higher high, and then therefore, you're going to have an opportunity to get back in the direct prevailing trend, right? Because this is now going to be a 1, 2, 3 reversal at obvious support. And so you might go long in here. Similar to this, because right? So now you might add a second position here once the market is reversed back in the direction of your prevailing trend, right? You stop short-term shorting and you long for the long term. So how do you putt? Like, when do you actually recognize when to putt? And that would just be longer-term technical analysis. So like I said, it doesn't get any easier than this one. Right there. Okay, that's why we have that moving average on the chart. Okay. So you could say, oh, right, well, there's a high probability of this sucker falling. Great. So now you've made that decision. In my opinion, you can't scalp and you can't putt without a long-term chart. Did you know that? If you have no idea what's going on in 1 hour, 4 hour, and daily, I don't think you could consistently scalp or putt. Because then the market could just seemingly switch directions on a whim, or the wind will just blow a little bit differently, and you'll always be a little bit late or a little bit early. You won't get the full pips, or you'll make 3 in a row, then you'll lose 2 in a row, and then you're down to that one, and that one wasn't great, and you've worked for 5 hours and you haven't really made much money. So what do you do to turn the odds more in your favor? Well, you try to scalp where price is likely to be moving now. And so that's why you might say, all right, we're running into daily support, so therefore I should look to scalp short. And that's all you do on this time frame. You can go from the 4 hour, maybe down into the 1 hour, whatever. That's okay. And remember, now we're talking about this area here, in which you're thinking, hey, price on the daily chart has hit the daily 21. There's a high probability that this is going to at least fall for a while, maybe not on the long term, but on the short term. Right? And it could retrace. Without that piece of information, the daily 21, then there's no way in hell you would guess that this was going to fall. And that's the point. You could be scalping this long and losing money. And you'd say, well, Wayne, I tried your putting technique and it didn't work. Well, yeah, you didn't know what you were doing. So you can't just look at the smaller time frames, right? So there's a key piece of information here. 100% retracement. Is that bullish? No. Retracement, down. Now, you may not have noticed this part. Okay, that's tricky. But this part is tradable. And that's a put, okay? Your actual put, your first put would be in here. Now, this is hourly. To be honest, there's like probably 6 puts here on a 5-minute chart. But just the idea, because even though this is an hourly chart, I would trade the 5-minute chart exactly the same. And that's called fractal geometry. And that's, we can get into that right some other time. But the logic's still the same, whether this is 250 pips or 25 pips, it shouldn't matter. Okay? So pretending this is a 1-minute chart, okay, let's pretend instead of 1 hour, it's 1 minute. And we find ourselves down here, big move on a 1-minute chart, right? What happens now? You get to the end of your Stokes cycle, and you know what you do? You switch this from a 1-minute to a 5-minute chart. Once again, fractal geometry. Because what'll happen now is on a 5-minute chart, all this is really a couple of red candles, and they're waiting for their Fibonacci retracement too, which looks kind of like that. What they see is this move. Okay. Then there's another opportunity to sell. So, on a right, you always want to work your way down to smaller time frames. Okay. For example, today, is it possible at the London Open that price could bounce at the weekly central pivot point? Is that possible? Is this something you could say, I'm analyzing my charts. We are at a key level of support. My long-term bias is long. Should I pay attention? Should I set something up? Should I invest my time and my focus on this here and now? Is the time of day proper for trading? It's the London Open. Okay. So yes, you could put this instead of swing it. If you're alpha, your ability to outsmart the market, you're alpha, because the market is the beta, so you're the alpha. If your alpha isn't to be long-term long, maybe you're not quite sure yet. You didn't like the double bottom, last week. Then you could still put this, right? Can you see this on a 5-minute chart? That you have a move up, and any of these retracements, you could buy it, 25-25 OCO. $15 OCO. I did one yesterday in Asia, because right, I was actually mentoring somebody and I made money at the same time, which is always a lovely thing. So I just threw down an OCO, Euro USD short. Cool. But it was only like 10 pips. All right. But, okay, so it could come down, roll reversal. Okay, you see this? Long it, 25 OCO. Okay, up. Wait for the pullback off the daily, resistance up here. No real pullback. You probably didn't get that one. Okay. Here's a conundrum. You probably bought this one. If you've been bullish all day, you probably did it again, right? You probably bought here, right? Off the daily central breakout roll reversal. right? 25, 25 OCO, and you're just past break even, and you're hoping it's going to continue. And in this situation, you should also change your time frame, because to me, this looks like what it wants to do is a Fibonacci retracement on the higher time frame. So you just got to keep your eye on multiple time frames, okay? And like I had this set up earlier, you're going to want to do the 1, 2, 3 type idea, right? Pretty obvious, right? Double bottom, right? Previous high is here, new high is here. That's the, you should be okay, let's go back to very basic trading, okay? Very, very basic trading. Double bottom, you say this is a reversal pattern. You don't know, but that's the idea, and you might start trading this. So like on the daily chart, I did this last week, and I'm still in the trade. All I traded was the double bottom. Have we made the higher high yet? No, we're not even in that higher high. It's only been 4 days or something that I've been in the trade. We haven't even made the higher high yet, so we're just still on the journey. Okay? So you could be in at the double bottom, but what you're really looking for, guys, the reason d'etre is you're looking for this. The high higher than the previous high. After a double bottom. This is where you put shoes on your children's feet. I mean, this is it. You could probably survive only doing this. Okay? So what do? Somewhere between the 382 and 618. Oops. 382 and 618. You're going to look to go long. Okay? This is, you're looking at this now on an hourly chart or maybe a 4-hour chart or whatever. It's a longer term pattern. But without that knowledge, how is your putt going to be if you have no medium term outlook for price action or direction in the market? If you said to yourself, if you didn't say to yourself, oh, 1, 2, 3 reversal after a double bottom, well then you're just basing it on, again, which way the broken gate is swinging, right? So you have to increase your odds. Okay? But the tactics, instead of buy and hold, you buy and you throw down an OCO. So how does an OCO work? And I use an EA called Auto Stop. If you Google Auto Stop EA, you're going to find like 1,000 of them. So they're all fine. What I do is my stop is 25, my take profit is 50. Okay? Or I could do this, 25, 25 OCO. Or if I know there's price action, but I don't know how strong the trend is, I can make it smaller, 20, 20 OCO. Okay? That's how you do it. So when I enter a trade now, as soon as a tick is recorded, the stop and the limit's placed. Automatically. Everything's calculated, it's just boom, boom, and I move on. I don't even watch the trade anymore. That's one way of doing it. Do you want to know the manual way of doing it? I'll turn this auto stop off. Okay, this is a terrible place to buy, but maybe I'll throw that. Do I want to do this? How am I going to do this? It's going to be I can't buy that, can I? I was going to show you how to do it, but I don't want to. It's very hard for me to place a bad trade. So how do I do it? I don't want to mess up the good trade either. Euro USD's mid-range though, and it's lacking trend, but all right, fine. Let me throw down a trade on Euro USD. Okay, there's no EA on this. Let's say I want to sell. Okay, I'm going to sell. Okay, you see I have an order in the market now. So I can modify this. Okay, 2020 OCO. So I go click, click, enter, boom. There's my 2020 OCO. Nice, right? Micro? Nah. It's just 100,000 gi. So that's how you do it. See how quick that was? Now here's how it works. So my trade is here. My stop is here because it's a short trade. As you can see, it says sell one standard lot. Take profit. You see how it's down here? Okay. If one of these, either the stop or the limit's going to be touched. Okay. Let's say I make money. It comes down. Price touches this take profit. What happens is this will offset. Okay. This trade here will offset this position. And my stop is still in the market though. So then that gets canceled. So this offsets that. And then this one is just canceled. One cancels the other. However, if I lose money, price comes up and hits my stop, this offsets my position, and my limit, my take profit order will be canceled. One cancels the other. OCO. And it's automatic. And if you're an old dinosaur like me, the reason this is cool is there used to be a time where your stops were not really attached to trades. So you could let's say close a trade and your stop is still in the market and you forget about it and you go away and price comes along, touches this, and because this is a buy order to offset a short, all of a sudden you're long in the market and you have no idea that that's happened. And the next day you open up your trading account. And this did happen to me in probably my first year. And I think that one I made money. It's funny, it was a long time ago, but I think I made like 200 pips. But the lesson was learned that holy crap, I could have lost a lot of money. So I grasped onto OCOs very quickly, where if the stop or the limit is touched, one cancels the other, and I never have a position left in the market by mistake. So Warren says, so it's the same as adding your stop loss and take profit. That is what it is, Warren. It's not the same. That's what it is. But they're associated with each other. Another way of looking at it is they're called a child and parent relationship. Okay. Okay. But see, if you enter a trade and then you enter in a stop, and then you enter in a limit, and you do all these things manually, they may not this stop may not have a relationship with the limit. And it's the relationship that's important. Now, when I'm scalping, this is super important because I don't have time to manage the positions, because I might get in there really quick. And in fact, this could be a 10-10 OCO, right? And I want to place the trade. I want an EA to enter the OCO, so I don't even have to modify it by hand. I just want to make the trade, move on to the next. But my point, though, is your trading still needs to be based on solid analysis. Okay? You also need to trade when the market is moving. So London open to London close. Yesterday I scalped the Shanghai Open. Okay, well, Shanghai Open. What else am I supposed to do? I'm in front of my charts. It's my job to make money. Pop in a trade. Okay, but you have to have proper trading. Price action, for example, in the direction of your prevailing trend. If the market's down, where do you sell? Here. Amateurs tend to sell here. Okay, that's a big no-no. So this one is tough because there's no real direction at the moment, right? So I don't find it a good trade. Okay. So my odds are pretty iffy here. Okay. This is kind of what it looks like to me. Now, I can see that if this falls, then we'll head back down. But right now, that's a big if, isn't it? Ryan says nice action for the yen in the Asian session. Yeah, in fact, one of the things I do is I pay a lot of attention to Asian currencies specifically. So when banks open for Australia, when banks open for Korea and Japan, when banks open in Taiwan and Singapore, and then when banks open in mainland China, guess what? Currencies tend to move. So I'll follow the currencies as banks are opening. So yen, like Aussie yen trades, I enter. There's two major times I enter: New York close and Asia open. That's prime time Aussie yen trading, because banks are opening and closing and so on and so forth, right? So let me go back to that Aussie yen and let me make a point here. Okay, so anyways, to wrap up the putt thing, if you're not making your putts, it's probably one of two things. Like I said, you don't have a medium or a longer term trend in play. You don't have a fundamental bias, so you're maybe trading both ways, as compared to just trading in the direction of the price action. But you also just may be very poor at short-term trades too, right? And that would be a whole different thing. Your trading technique might be terrible. And so which one is it? Well, we would have to take a very close look at your trade, right? But like the laws of the universe, let's say, dictate where you have a body in the space-time continuum, and things are going to want to revolve around the body, right? In not the space-time continuum, but the price-time continuum, you're going to see the laws of the universe are based on pullbacks and extensions, not circles. And what you need to be doing is, first of all, recognize that it's going up, so you need directional forces in play. But then you need to buy the dip, not up here. This is usually where a good amateur buys, but they don't make any money because they get knocked out here. right? A bad amateur buys here because they're like, aha, it's going up. It goes down. Then what do? They buy up here. Aha, now it's going up, and then it comes down, and inevitably they lose. A professional buys the dip, right? And that kind of stuff. Now, the putt is simply saying you get out at the top of the extension, or since it's scalping, really, it's a technique of scalping. You want to get out because some scalping techniques, what they do is they wait to get out. Let's say you're long on the 5-8 cross, which means you're a little late because it's lagging. And then you're out on the 5-8 cross, but then you're late again because it's lagging. And you're only making this little middle ground. Right? Here is your profit zone, which might only be 6 pips. But if you had bought the dip, threw down an OCO, you definitely get out. And you almost always get out before the pullback. Sometimes you leave some pips on the table, but more often than not, you make a quick 20 pips and you're out, and then you want to look for it to reverse again, then you do it again. Make a quick 20 pips and you're out. And you're doing the price action this way, but in the direction that the market's supposed to be moving at the time based on your longer term analysis. But where your mistakes are, if you've missed like 3 or 4 or 5 putts in a row, then it's a trading problem. Okay, but that's where I'd have to roll up my sleeves and sit down with you for a month, figure out what the heck you're doing wrong, and fix it. That's easy. So a comment on the Aussie yen and timing and stuff. Let me show you something. Just 4 hours? No, let's do hourly. All right. Look at what happened yesterday. Aussie yen started here, a downward move. Oh, snap. Is that the Asian session? That's the Tokyo Open. Japanese yen started trading right there. That's when banks in Japan opened. Whale oil B. Isn't that interesting? Check this out. This is New York equity close. Isn't it interesting? It sold all day. This pair fell all day until trading in New York stopped. Guess what happened? They cashed out of their short positions. How do you get out of a short position? You say close, right? You close your trade. What does your broker do? Longs you, puts you long in because you're already short. That offsets your long. So what happens is the market starts to creep up. Opportunity. So that, like I just said, this is an interesting time to trade Asian currencies. Okay, there's one. Look at Tokyo Open now. Right? Tokyo falls back down, but notice the trade. Zip, zip, Fibonacci, right? Can you see it? Clear opportunity to sell. So you can see there could be a couple of putts in there, right? We hit our double bottom. London Open. Down in Asia, up in London, that's called the Asia Fade. But anyways, we have a pattern in play. Notice how key the sessions are. Right? You understand that how your clock is supremely important in this picture? Look at Tokyo open, London open, right? New York open. Ha! Look at that. Tokyo open, down. London open, down. New York open, down. And then once the session's over, up, right? Tokyo opens, down. London opens, up. So you have to be able to play patterns. Ryan says sometimes the 21.55 cross with no pullback. Do you miss that trade? Yeah, most likely, because I don't know if it's going to braid or not. Okay. So the key here, guys, is to say, is it going to reverse here at the London Open? Without that thought process, everything else is just worthless. Just noise and luck. And your putting may not work. You got to get this part right. And then the rest is just on a 5-minute chart, it pulls back, buy it, out. Pulls back, out, right? But the money is made here. Okay? Not on the 1-minute chart, for example. But look at this 1-minute chart. Like, you know what? Let me turn. Let's try this out. Okay, 1-minute chart. Let's try to get a little closer. Okay, here it is. Okay, are you telling me there's no putts here? At some point, you got to be on the clue train on the small time frame, right? Look at up, down, up, down, up, down, up, down, up, down, right? Woo, big one here. Up, down. I mean, there's like 1, 2, 3, 4. Here's the roll reversal. I'll probably try to take that one. 5, roll reversal 6. You know, there's 6, 7 putts here. Here's the next one. Right? Off this roll reversal. Here's another, you know, here 8. Okay, there might be a loser in here and then a new breakout. So yeah, I'd say there's at least 6 putts there on a 1-minute chart on the Aussie yen. Okay. But I can see if you're not trading properly, if you're always late, what happens to you? Right? I don't know where it comes from, but a lot of new traders, what they do is they wait for the break and they buy. It comes down, they get knocked out. They wait for the break, they buy, they get knocked out. They wait for the break, right? So they're buy here. And it's just exactly the opposite. A better way to do it is buy here. Buy here. Right? Buy here. Buy here. Right? Can you guys see that? Right? When you lean on the oscillator for this. Now remember, you've already made all your other decisions. This is a weekly central pivot point. Your prevailing trend is probably already up based, you know, for the last week and a half. Right? My bias has been up on this. So now you have to say, well, I just wonder at the London Open if the central pivot's going to hold. And all of a sudden you get up, 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 down, down, buy, 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 up, 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 up. At some point you got to say, you know what, I want to take one of these oscillator cycles, right? Right, guys? Right? No? You're hard to read, man. What's going on? The strategy still has to be there. You have to say Aussie yen's supposed to go up. This is the right place for it to go up. This is the right time of day to go up. So you can't fake that. Now, Andrew says, you're right, but I'd look for other signals too. This is scalping. What more would you possibly need? My worry, Andrew, is that it would be too much that you're looking for. Because really, what I'm saying is, you buy the roll reversal, right? This one didn't do it, but you got this one, and then you do this one, okay? Just so happens the oscillators tell you the same thing. I don't even usually wait for the oscillator. Right? It's too slow. Because I think the money is made on this part of the strategy is where the money is made, not the tactics. It's like finding the blueberry bush is the skill, not picking blueberries. So Warren says, where do you get out? Warren, what are we talking about? OCOs. Where do you get out? At the limit order. Right? There's no, let's say, logical target. You want to place trades that are simply going to go in the cup, right? We're putting, right? So let's say you have it set at 2020 OCO. Okay, you long somewhere in here. Might take a while, right? You might long in here too, and now you got two going. One's at break even, the second one's not. Here's a third one. Oh, but now your first one's knocked out, and you got these two, and then you come up here, and your second one's knocked out, and you just putt and putt and putt. You're gonna miss one here and there, but you want trades that are going to get out, because like I said, I've seen a lot of people that trade, let's say, standard spot type trading, where they like trade the 5A cross and then that kind of stuff. Okay, good, fine. But they apply that to scalping. But what happens is now even on the 1 minute chart, you're relying on lagging indicators, which means on a 1 minute chart, which is fast, you're using slow indicators. So by definition, you're always late, and you're going to give back at least 50% of your profit. Maybe not on every trade, but at the end of the year, if you made 1,000 putts with OCOs, you'd make way more pips than 1,000, scalps using more of a lagging indicator, like a moving average crossover or an oscillator crossover, that kind of thing, right? Andrew says, hard to measure risk reward for me in these setups. Andrew, you're not thinking scalping. Okay? Here's the risk reward. If you can't make 70% or more of these putts, you have a putting problem. It's not a risk reward setup, it's price action. Risk reward, now you're talking about, medium, long-term trades, you're talking about investment decisions. This isn't an investment decision. And in fact, what we were talking about is the proper way, or let's say the typical way I'll do this scenario is when I'm long-term long, but for the next few hours or a couple of days, I expect downward move in the long-term direction. So I'm just picking up some pips. There is risk reward. Well, the risk reward question comes from this one. I'm going to be in my Aussie yen trade until December. You see what I mean? Yeah. But risk reward, I'm just making easy money. I'm not going to risk more than I'm likely to make, but I'm only taking putts if I'm certain I'm going to make 75% of these things. There's no risk reward. I'm just protecting myself from the downside. And if I lose a couple in a row, I just stop because I'm like, wow, I got this wrong. And sometimes that happens. You get a double bottom forming at the London Open and you get some green candles and you're like, that's exactly what I thought. And then some news comes out and the whole thing collapses. And oh, all right, that happens. But is that a normal day? No. Double bottom in an uptrend at the London Open? I mean, my gosh, what more do you need? It's an uptrend. It's London Open. It's green candles. What? Every stock market on the planet's green. And you're shorting, right? No, it's impossible. I don't believe it. I don't think you can. So what are you doing now? Risk reward ratio, you're making 20 pips. Boom, comes back down. Do it again, make another 20 pips. Boom. Do it again. Another 20 pips. Boom. Great. Wait for the pullback. Oh, it's pulled back. Do another one. Boom. There's no risk reward. You're just making small trades that you can do with your eyes closed. Remember that, guys? This comes from golf. That's why I call it putting. It's like practicing. Because I'll tell you what, if you get good at putting, your swing trades are good. They look exactly the same to me. Whether it's a 5-minute chart or a 4-hour chart, most of the time I can't tell the difference. I'm doing the same thing. Right? Up, down, down. Buy! Right? Where's the debate? Up, down, down. Buy! Up, down, down. Buy! Right? And then when it goes down, 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 you're like, oh, hey, stop buying, for crying out loud, right? Yeah, anytime, guys. Look, I have one goal for doing these webinars, guys. Okay? Do I sell you stuff? No. I just want you to succeed. So if you're interactive with me, I'm interactive with you, you get a learning experience. There's 100 and something people in the room, 5 or 6 people are very active, but for those that are quiet, jump in. If I'm not being advanced enough, I can become more advanced. Boys got some skills. I showed you last week, right? I made, what was it, 58 out of 62 trades were profitable. That's not bad. But if it's too advanced, look, I'll bring it back. I can, whatever you need, I'm here for you. All you need to do is work really, really hard. Not for a couple of days, maybe for several years. Meanwhile, you need to fall in love. You need to say, I love the fact. Oh, by the way, I think I just made my money on my, you guys just made me $200, I think. But you need to say, you know what? I think this is cool. It's Saturday morning. I'm drinking a cup of coffee or drinking a tea, and I'm reading a PDF I downloaded from a central bank. You see what I mean? That you should say, I think this is cool. I feel like a professional. I feel like the top 1%, right? That's where you get blood, sweat, and tears for years, get rich, slow scheme, but fall in love with the whole process. Okay? No, it didn't move that much. It only moved a little bit. Look, you want to be chicken? Check this out. Yeah, I'll zoom in a little bit more. Watch this. You ready? That's it. Can't lose any money. So that's how you do the OCO. But you sold, yeah, yeah. So it's down. So I'd make money. Kareem says on the macro view, all right. So you have to understand that everything's priced in. I gave you a line in the sand last week, and I said the stock market has to go up here. Does anyone remember that? That was exactly right here because there was no green. Monthly support. So you said, am I not worried about the macroeconomics? Like, why am I long these yen pairs, right? Is really the question, right? Well, because the yen pairs dropped. We double bottomed at the support, and I went long Aussie yen. Last night, I actually went long CAD yen, so I have to figure out what went wrong there. But yeah, that was priced in. We're done with that. This whole, I'm worried about the world. Oh, what about macroeconomics? What about the economy? What about Europe? What about China? Blah blah blah. That's no one. That's done. That was over last week. You know what I mean? Literally, that was so last week. They might still be talking about it on TV, but that's just stupid. This is up. Everyone's making money. Everybody's long. It's green candles all the way. Lovely. Right? You've been long DAX all day. Yeah, same sort of thing, right? No, actually, Hendrik, the Euro USD said sold. It didn't say buy. You might have been looking at my limit order or something. Not sure, but it said short. Now I'm break even, so it doesn't matter. But more importantly, guys, I bet you if I watched you trade and I said, all right, place an OCO on this, I want a 25 pip stop, 50 pip limit. I bet you the vast majority of people in the room here would take well over 1 minute to do it. Oh, 50 pips. Well, I shorted the euro at 111.42. So 50 pips would be 110. And, you're doing stuff like that, right? And then you're like placing that, and then, well, then my stop. Well, then if I did the, and you're right? It's true, isn't it? How long did it take? I actually took my time to show you, right? So you click, you right click the order, and then I go boom, 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 done. I even when I do it manually, if I spend 10 seconds doing my OCO, I feel like it was way too slow. Right? Because I don't plan on I might not be in the trade for, most likely I'll be in the trade for 1 minute, but sometimes not. I mean, you just got to move, right? So, again, the putting is going to be based on the law of averages. Someone asked about the targets and stuff, right? I'm just throwing down, I want trades that for sure are going to take me out. Do I leave this on the table? Yes. But if you used a moving average, you would have to have the moving average roll over, and you're going to exit down here anyways. I'm probably going to make 5 more pips. but I might also get in the trade 5 more pips early. So while your profitable trades, let's say, are averaging 10 pips, I'm doing 20/20 OCOs, and I'm averaging the 20 pips. We might make the same trades all day, and sometimes your trades make a little bit more, but almost always you're going to give a little bit back for using lagging indicators. And I'm not using lagging indicators at all, right? I'm getting out based on, it's almost like a binary, right? Just like at that price level. Once I have 200 bucks, I put it in my pocket. Then half an hour later, do it again. Boom. Another 200 bucks, put it in my pocket. Half an hour later, do it again. Right? And over a course of 1,000 or 1,000,000 or 10 million, if you're like back testing and stuff like that, you'll find the law of averages is going to be higher with the OCO if you're truly using 1 minute and 5 minute charts. Okay, obviously, if you're using hourly and 4 hours, you'd probably change. You know, when I'm swing trading, very often I'm doing 150, 300 OCOs. Nick asked me about, about the other pivot points. There are several different types of pivot points. And, you know, I don't, and it's only because in the beginning, when I first started trading, there was very little information on trading. There was very little trading indicators. In fact, my first major broker, I think my first broker was FXCM, and then my first major broker where I started putting money in, and then later when I was a registered hedge fund manager, I actually had my own dealing desk at GFT. But I was with GFT for many years using their deal book, and then their deal book FX, and then their deal book 2, I think it was, and whatever. I've been there a long time, right? And because of, me, right? I hate to say it, but GFT actually used my pivot points that I had custom made, and they integrated them into their deal book. And then one day I was one of the speakers at the FXCM Trading Expo back in 2005, maybe. And it was great. I was doing a live training event, speech kind of thing. And there were so many people in the room that the fire marshal came in and threatened to close down my seminar because there were so many people in the room and blocking the doors, and there's people sitting on the floors and in the aisles and behind me. And I did this big, huge presentation on pivot points. And then it was sad because FXCM didn't have pivot points on the platform, right? So like my point is, when I started, there wasn't a whole plethora of trading indicators, and the ones that were out there were hard to get, maybe had to be custom made. There wasn't much literature. The guys that were selling training courses were scam artists and scumbags. So I'm self-taught. Okay? So that's it. So I use very basic tools like, daily, weekly, monthly pivot points, but they're just the standard pivot points. They're not variations of pivot points and stuff like that. I know they are out there, but I haven't changed my trading style. How about this? In the 10 years that I've been trading publicly, in fact, oh, you know what? It's today. Today, right? Today, February 17th, 2006 was my first public webinar. It's exactly 10 years today. I looked it up on FX Street. Today is exactly 10 years. So 10 years ago, when I first started speaking publicly about trading, it was exactly the same as you see now. Yeah, thank you. I forgot about that, but I looked it up. It's the 17th. Yes, it does, Nick. So, but what I'm saying though is I haven't changed anything. Okay? It's still the same. I don't have sort of a funny, a new trading strategy. I mean, it's when people get these emails, right? I'm sure you get these emails like, hey, come into my webinar. I want to show you my new trading strategy. By the way, you can buy it. I'll sell you something about my new trading strategy. Who the heck wants a new trading strategy? Yeah, DeBeast is right. Actually, 10 years ago, um, there there were not any actual webinars. In fact, I was actually the only one doing webinars. Uh, it sounds corny, but I was the first Forex trader to use webinars to show people how to trade live, and that was my hook 10 years ago, where I said, you know what, I want to help people, right? The story's in my book, right? I'm like, I was lonely, I was bored, I was going through a losing period, and I realized it was because I wasn't surrounding myself with successful people like I had done in my other successful businesses. You know, before I found Forex, I had already been in magazines and newspapers around the world. I was already in a small, in the venture capital entrepreneurial world. I was a pretty well followed person. And I left all that, became a Forex trader. So it's kind of interesting. But then I realized I wasn't having the success I wanted. And I asked myself through not just meditation, but actual business planning retreats and stuff, I'm like, why am I not as successful as I'm used to? And I realized I wasn't doing the same things that I had done to find success in the past. And one of the key things is to surround yourself with other successful people, and ideally even smarter people than yourself. And so what I ended up doing is I said, well, I need to build a community of other Forex traders. I've searched the world wide and low, and I don't know anyone else that trades Forex, kind of thing, right? I've never met anyone else that trades Forex. I think they're all old white men sitting at the top of the bank smoking cigars and masters of the universe kind of stuff that would never let me in, right? Guy would never let guys like me into the building, right? Yet alone up into the trading desk, right? So I said, well, then it's my strategic decision for my business, my trading business, just to develop a community. And then I said, well, how the hell would I develop a community of other Forex traders? What would entice somebody to hang out with me at least an hour every single day? DeBista has, been here every single day for I don't know how many years. Just years and years. So how do you what would make someone, as smart and as good looking as DeBista hang out with me every single day? I said, you know what I'll do? I'll just show them what I've learned to be a success. I'll just show them. And it was radical. Just like, I'll just show you. Why don't we hang out? We'll trade together. Right? So that's all. Because I need you. You make me want to be a better trader. Did I study Forex at school? Of course not. I'm in college now. Did I study Forex at school? No, I'm in college now. So anyways, so that's why maybe my charts look complicated when you're not used to them. And I do have a lot of things going on at times, but the point is really it's simplified. If it looks complicated, it's maybe because I have a lot of indicators going on. Oh, wait, I'm about to make money. Cool, 180 bucks. Thank you, guys. Appreciate that. See? You just made me $200. Thank you. I appreciate that. I'm going to go out and buy a bottle of wine. And get something nice for too large, huh? Yeah, so if it looks complicated, just tell me. And it is, but I'm so used to filtering stuff out that I only see what I need to see when I need to see it because I'm looking for stuff, right? So if it does look complicated, tell me. I will clean it up. I'll delete stuff that's irrelevant. We could even just go to a blank chart, just a few lines, and we'll simplify a lot. And then what we'll find out is if you trade on a naked chart for a while where there's no indicators at all, just candles or even just a line, at some point you'll feel like you're missing something. You'll say, man, I wish I knew if that was a pivot in there somewhere. And then what you say, okay, well, why don't we add that pivot point? Okay? You may not need oscillators. I used to have MACD and stochastics. Then I realized I can see MACD just by looking at the chart. I can do the calculations in my mind. So why would I waste the real estate on MACD? But is MACD not important? No, of course it's important. So what we'll do is, if it's too complicated, I'll simplify the chart. We'll slowly add what we need, and therefore what you'll have is the information available to you so that you can make informed, intelligent decisions. Okay? And that kind of stuff. Now, if you need more help than that, than me being here every day and discussing all these things, then you do have to pay me money if I have the time. I probably don't have the time, but I can fix you. But it's work. So anyways, I got to jump, babe. It's been real. So I'll tell you what, why don't we meet up here again tomorrow? Peace on earth. May the pips be with you. May your profits be above average. Have a nice day. Yeah, 10 years. It's interesting though, right? Yeah, so today is exactly 10 years since I reached out and said to somebody, hey, you want to learn how to trade Forex? You know how much I charged for that webinar? Nothing. And it was called, I think it was called 12 Ways to Leave Your Lover. 12 Ways to Leave Your Lover, how to exit a bad trade. Isn't that funny? Slip out the back, Jack. So again, peace on earth. May the pips be with you. May your profits be above average. Open a trading account at TradersWay.com.